Hello everyone, here is Investment Banking Market Development Week 4 of January 2019, presented by John Wang Park, Jimmy Zhang, Sierra Russell, Taiwan M. The merger and acquisition spotlight of this week is between two parties, Chemical Financial Corporation and TCF Financial Corporation. Chemical Financial Corporation is a bank holding company headquartered in Michigan. It operates Chemical Bank, which has 249 branches, and the TCF Financial Corporation is based on Minnesota with over 400 branches. It is a long story for TCF expanded to Michigan. It starts in 1990s with the acquisition of First Federal Savings Bank of Oakland County and Great Lake National Bank. Until today, they have a big merge. It will be one of the biggest banks in the Middle West. Here are graphs of Chemical and TCF stock market after their merge announcement on Monday. Both company stocks has increased by 5%. There are many synergies for this merge. The biggest synergy is that creates a premier bank in the Middle West with 45 billion in assets. That is a huge number. They also have a great structure. TCF shareholders will get nearly 0.51 shares of Chemical common stocks for every TCF share they own. The TCF shareholders will own 54% of the firm when the deal is done, and Chemical shareholders will own 46%. In May of 2018, President Donald Trump signs the bank law, which increases the threshold to $250 billion from $50 billion, under which banks are considered too important to the financial system to fail. It reduces regulation on middle-sized banks. It gives the opportunities to small banks to merge with each other to acquisition each other.
2019 is expected to be a big year for IPOs in terms of capital for high-profile unicorn companies of Silicon Valley. New Fortress Energy is a liquefied natural gas company and is scheduled to start trading as soon as possible. All filings are in with the SEC, but the IPO might be slightly delayed due to the government shutdown. They are expected to sell 22.2 million shares between $17 and $19 a share. Some investors say it is a riskier investment due to reported losses of $43 million in the first 9 months of 2018. However, if the firm does well on the market, it will be a good sign for other unicorns of Silicon Valley who won't start trading until the end of 2019, including the Paul deals, which refers to 4 giant tech companies who are expected to file for IPOs during 2019, including Pinterest, Airbnb, Uber, and Lyft.
In the fourth quarter, Pfizer has lost $394 million from the acquisition of a problematic firm which produces sterile injectable medicines. And the loss of charges for layoffs were also included for that total of $394 million. Lyrica and the maker of Viagra stated that it anticipates full-year earnings in the range of $2.82 to $2.92 per share, and its expected share from industry analysts were about $3.04 per share. The Norwegian Air is now willing to raise 3 billion Norwegian crowns, which is about $353 million in a share sale, in order to strengthen its finances after the British Airways owner ruled out a bid for the loss-making budget airline. Thermo Fisher Scientific, which is the largest to make scientific instruments, will sell its anatomical pathology business for $1.14 billion in cash. Sweden's Loomis agreed to acquire Zeman, which is a German cash handling service business, at an enterprise value of nearly 160 million euros, which is about $183 million.
In domestic economic news this week, the government shutdown causes delay in closely watched economic data. Reports for GDP, December personal income, and December trade reports that were scheduled for this week will be delayed due to the shutdown. According to the Congressional Budget Office, the projected GDP will rise at 2.1% annual rate in the first 3 months of the year, which is down from the 2.5% pace anticipated before the shutdown. The 35-day shutdown is also projected to cut 0.4% from the economy's annual rate of growth for the first quarter of 2019. However, according to ADP Analytics, private companies added 213,000 jobs in January, beating the expectations of 178,000 and proving that the job market weathered the government shutdown well. The central bank's open market policy meeting this week may put the central bank closer to ending the portfolio wind down that started in 2017, coming much sooner than initially expected. Some investors blame the recent market volatility on their central banking shrinking the portfolio. The Feds are letting the portfolio shrink by allowing Treasury and mortgage securities to mature without replacing them. This means that there would be more U.S. Treasuries in the portfolio, which will help support the economy and market within the United States. The Fed's decision about the size of the portfolio is driven by the reserves in the banking system. The Fed expanded its portfolio during and right after the financial crisis, which in turn expanded the reserves in the financial system. After the crisis was over, some Feds wanted to shrink the reserves and thus the bond portfolio to help control interest rates. However, it's now believed that they can control interest rates even with the high levels of reserves, and if it can keep reserves in it, then it can keep a larger portfolio of securities. The IMF cuts forecast for global economic growth to 3.5% for 2019. Initial forecasts were 3.7% in October and 3.9% last July. The cut came mostly from Europe, particularly Germany, France, and Italy. The IMF listed the top risks contributing to the decline in global economic growth and financial stability being global trade tensions, the government shutdown in the United States, fiscal policies in Italy, and the messy dispute in the UK as they leave the European Union. Trade talks between China and the U.S. will continue on Wednesday in efforts to reach a deal by the March 1st deadline. The goal of the talks is to stop the Trump administration from upping tariffs on Chinese goods from 10% to 25%. The tariffs were originally set to go into effect on January 1st, but were extended to March 2nd after the two countries' presidents agreed on a 90-day truce. The British pound dropped 0.7% on foreign exchanges after a no-deal Brexit becomes more likely. British Prime Minister Theresa May seeks to renegotiate terms of withdrawal from the EU, something that the EU is not interested in doing after reaching a legally binding agreement for the withdrawal last November. Seeking a renegotiation has risen as a result of the enormous divide in the British Parliament about disagreeing on the terms that were initially agreed upon.
As we can see from the graph and chart of S&P 500 index, after a sharp decline from the previous year on December 2018, the S&P 500 has showed a stable increase from the new year 2019. Over the last week, after opening up at $2,648.64 on January 19th, it closed at $2,638.14 on January 23rd. Here are the three lists of foreign exchange market for Asia, Americas, and Europe and others. First of all, equities in Europe rose as well, following gains in Asia. Investors have turned to assets like the US dollar and government bonds in times of turmoil in recent months. However, the US dollar fell Friday as stocks around the world jumped to end the week. The Wall Street Journal Dollar Index, which measures the US currency against a basket of 16 others, fell 0.6% to 89, recording its biggest weekly decline since November. Commodity markets. As we can see from the two graphs below of gold and crude oil, during the past 5 days from January 24th to January 29th, gold has been increasing slightly. The price of gold rose from $1288.20 to $1317.80 at closing. But the price today is still a lot lower than a year ago, which was $1390.48. On the other hand, crude oil does not seem to look very stabilized, as it is clearly shown from the graph. There were many uphills and downhills during the past 5 days, closing with $53.47 on 29th of January. Moreover, in the scale of yearly graph, it is clearly seen that crude oil has decreased overall.
News regarding the industry. Caterpillar reported weaker than expected quarterly earnings due to slowing growth in China's economy on Monday. Caterpillar's shares fell 9%, while the Dow Jones dropped 200 points on Monday. The Fed announced Stacy Tablin as a new head of economist, replacing David Wilcox as a director of the central bank's Division of Research and Statistics. The Fed announced that it will not raise interest rates on Wednesday. The yield on the benchmark 10-year Treasury note fell to 2.694% from about 2.73% before the announcement. Growing risk of a sharp U.S. economic slowdown due to cooling growth in Europe and Asia. Reports last week showed that China's economy grew at the slowest pace in nearly 3 decades, causing a slowing of demand. Government updates, timing for data releases delayed by shutdown. BEA said Wednesday that it will publish data on the U.S. international investment position for the third quarter of last year on February 1st, and its U.S. international trade report for November on Feb 6. But the new date for fourth quarter GDP and December personal income and spending hasn't released yet. According to Mr. Powell, the case for raising rates has decreased somewhat. We continue to expect that the American economy will grow at a solid pace. Some signs of weakness in consumer and business sentiment, as well as a global economic slowing in places like China, is giving reasons for caution. Hedge fund news. 13 individuals and 10 companies are facing charges for unlawfully selling securities of Woodbridge Group of Companies LLC to retail investors. The defendants marketed Woodbridge's securities as a safe and secure investment and reaped millions of dollars in commissions on their sales, even though they were not registered. Next, a number of big-name hedge funds have lost hundreds of millions on investments in PG&E stock. PG&E, the California-based energy and utility giant, filed for Chapter 11 bankruptcy, following the massive liabilities the power provider faces in the wake of the wildfires. Boston-based Ballpost Group, the largest hedge fund shareholder of PG&E, has seen its position decline 74% in the last few months. Blue Mountain Capital's value of that position has declined from $198.2 million at the end of the third quarter to $51.74 million. Next, Bridgewater. Rentec make $13 billion in a grim year for hedge funds, and their success was based on 20 top managers. According to the chairman of LCH, most managers in the top 20 either managed to stay out of the trouble when equity markets fell sharply toward year-end, or had an investment approach that was not linked to the direction of equity markets.